Dear students, welcome to my video classes. Today's topic is national income. This is related to the syllabus of macroeconomics for both BA students and HS students may go through this topic. First, I want to make it clear that instead of country's income, why it is written, why we have taken it as a national income, taken the term national instead of country. Dear students, you know that there is a difference between country and nation, because a country may resides citizens of that country and non-citizens, or you may say foreigners, inside the country. So when we talk about country's income, it includes both the income of the citizens of a country and the people who are not non-residents of India. That is accounted, and we left the people who are citizens but not residing in India. That is the reason when we take the term nation, it includes all peoples who are residing, they may be citizens or non-residents of the country, residing within the boundary of the country, and the peoples who are residing abroad, though they are the citizens, who are not residents, who are not residing but citizens working in abroad. Their income is also accounted. That is the reason instead of country's income, the term nation is used here. So from this clarification, it is justifiable that the term nation is justiciable when you calculate the income of a country or income of an economy. But to calculate the income of an economy, from this it is clear that the income of an economy can be accounted by calculating income of the domestic country plus income from abroad. When we talk about the domestic income, it is the income of the domestic citizens plus non-citizens who are residing. And when we talk about the income from abroad, it is only citizens of the country but not residing inside the boundary, or you may say citizens residing outside the country, residing in the rest of the world, domestic citizens who are residing in the rest of the world, আমাদের নাগরিক যারা পৃথিবীর অন্যান্য দেশে বসবাস করছে। আর when we talk about domestic income, it is the income of the domestic citizens plus the peoples who are non-citizens but residing within the country. এভাবে ন্যাশনাল ইনকাম অ্যাকাউন্ট করা হয়। Now, to calculate income from abroad, normally we will calculate simply with the help of the two terms. One is called export, another is called import. Means when we account the external sector, we will obtain the income from abroad, because both these factors includes collectively called external sector. It includes the account of visible and non-visible items, visible and invisible items. Visible means goods, only goods. Invisible means services. Services, that may be teachers, that may be doctors, nurses, whoever earned by providing services to abroad. And visible items means only goods, means tangible things which we are exporting to abroad or importing from abroad. When we take the account of export and imports, we'll account all these things together. So in short, it may be accounted in this way. It may be called net exports. Export থেকে import কে বাদ করার পরে যা থাকবে, that is net exports. And always every economy prefers to keep net exports positive. When it remains positive, or when it becomes positive, when our export is greater than import, then only the export and import will be favorable for an economy. This is the simple account of income from abroad. But when we talk about the income from domestic country, it will be a big task. It will be a big typical case, because domestic income of a country or income of the citizens may be accounted in through two ways. One is goods, another is services. Goods may be accounted in quantity, but services cannot be accounted in quantity. So to calculate national income, domestic income or national income, we have to take different measures, different methods. So to calculate domestic goods, to calculate the accounts of goods, we may take the final product method to account national income. But in case of services, we couldn't take this method because it is not quantitative one. So in that case, we'll take the help of the account of income method. In this way, in calculation of national income, we may go through different methods, or we may take one another method, that is expenditure method, because we know that whatever our income is our expenditure. So if we calculate the national income with the help of expenditure method, it will be more easier than the other methods. Because if we calculate the expenditure of the consumers, or we may say private consumption expenditure and investment expenditure and the government expenditure all together, then we may got the total expenditure of the country, which is the total income of a nation. So to calculate national income, we may take the help of these three methods are used. One is called final product method, income method, and expenditure method. Now to calculate national income, domestic income, what you have to do? We have to calculate the first domestic production, that is called gross domestic product. That may be also accounted in different ways, because in gross domestic product or in other method or whatever be the concept, we are accounting the value of goods and services. Value of goods, and because income is a monetary term, so we have to calculate the national income in monetary terms. In that context, whatever be the goods and services produced, we have to calculate the value of goods and services to calculate to get national income, or to attain national income, or attain the income in nominal money terms. So to calculate value of goods and services, there are two values generally exist. One is called market value, another is called production value, or you may say factor cost. Market price, another is called factor price. Whatever goods and services are produced, they are measured in two ways, either market price or in factor price. That is, to calculate domestic income, we have to take the help of some fundamental concepts of measuring national income, that is gross domestic product. This may be accounted in three ways. Either we may calculate with the help of income or final product method or expenditure method. in any of the method we can use to calculate the gross domestic income. দেশের আভ্যন্তরীণ আয় যোগ করতে গিয়ে আমরা we can take the help of any of these three methods. Means GDP or domestic income may be calculated, is written as GDP, means gross domestic product. There is no confusion about the product and the difference of income. There is no difference, product and income. You may use the term income, but normally we do not use the term income, because you have to first calculate the number of goods and services produced, and then we'll take the money value of that goods and the total amount of goods and services which are produced. We'll take the money value in terms of money value. Whatever goods and services are produced, whose values are taken in terms of money. So before calculating it in money terms, first we have to calculate the units produced. So in that context, gross domestic product instead of income. Now we may take the help of, we may calculate the gross domestic product out of any of these three methods. So normally to explain or to make it more clear for the students, we normally use the concept of expenditure method, because whatever our expenditure, that is our income, or whatever our income, that is our expenditure. In that context, we will use the term, we will use the method of expenditure in calculating gross domestic production. Now what is gross domestic production? It is the money value. It is the money value of all final goods and services produced, all final goods and services produced in a country. Means we are talking about domestic, so we couldn't write here economy. In a country during a year, একটি বছরে, it is calculated every year. We couldn't mix up the income of a year with another. Now look, what is the meaning of the GDP? It is the money value of all final goods and services produced in a country during a year. These are the terms very important to define gross domestic product or to define national income. Now that money value may exist in two types. It may be market value, or it may be factor price value or factor cost value. Means production নে যে খরচ তা বোঝাতে পারে, অথবা বাজারে বিক্রির সময় যে মূল্যে বিক্রি করা হয় সেটাকেও বোঝাতে পারে। সেই অর্থে দ্যাট মানি ভ্যালু মে এক্সিস্ট ইন টু ফর্মস. সো ডিপেন্ডিং অন if we are calculating the money value in market price, then we will write gross domestic product at market price. If we calculate the GDP in terms of factor cost value, then we will write here factor cost. The difference between the two terms is that market value is a nominal value and factor cost is a real value of the goods which are produced. Real value, actual value. Because money value, market value exists indirect taxes, and factor value doesn't exist indirect tax. So the actual value of the goods and services which are produced, that may be calculated with factor cost, actual value. When you calculate the GDP at factor cost, we will obtain the actual value of the goods whatever produced. Now another term that is called final goods. Means in calculating GDP, we couldn't include the value of the goods and services which are intermediate. Means there are another concept of goods, one that is called intermediate goods. What is intermediate goods? All raw material goods which are used for the production of final goods, or which are used in the process of production, whose shape can be further changed in the process of production. All goods are called to be intermediate goods. It includes raw materials and the goods which are finally not produced or which are not ready for consumption, which have further processings in the process of production, or which have some stages of production, remaining stages of other stages of production. In that case, that goods are called to be intermediate goods. Say, if for example, silver, copper, iron and steel, these are the examples of intermediate goods which are not accounted in the calculation of national income. Always it is excluded. We have to exclude all these things, otherwise our national income accounting will be face the problem of double counting. We have to avoid double counting, we have to avoid intermediate goods, the value of intermediate goods in our calculation of or estimation of national income. Now, instead of country, we couldn't, if we write economy, then it will be gross national product. So you couldn't write economy here, it should be a country, and during a particular year, then it is called to be the GDP of the country. That means GDP may be calculated at market price or at factor price, or you may say factor cost. Now, when we calculate the final goods, value of all final goods and services produced in a country during a year, we will obtain the value of GDP, and that may be accounted in different ways. If we take the help of the expenditure method, the equation of GDP will be is equal to C, means private consumption expenditure, whatever consumption done by the citizens or non-citizens who are residing within the country are calculated in the consumption. It is termed as private final consumption expenditure. Private means it is not government. All private individuals who have spent on final consumption of goods and services plus investment expenditure. It is also private, means our savings. Whatever we saved, it is invested. Whatever we saved, that is in banking systems, is automatically invested by the bankers. So the term investment is used instead of savings. Instead of savings, it is investment expenditure. Next, there is another type of expenditure that is called government expenditure. To calculate gross domestic product, we have to calculate in expenditure method in this way, that is GDP is accounted with the help of the consumption, investment and government expenditure. When we add export and imports or net exports with these expenditures, it becomes gross national product. The difference is this: C plus I plus G plus X, X minus M, or you may write NX. Means this is the these three terms or three accounts gives us the gross domestic product, and this account will give us the foreign income, or you may say net income from abroad, and net factor income. It is used as like this: net factor income from abroad. In your book it is written as NFIA, net factor income from abroad. It means this NFIA, that means we are obtaining domestic income with the help of domestic income. This is the account of domestic income, and this is the account of foreign or income from abroad. When these two accounts are calculated, we will obtain gross. Instead of domestic, we have to write national because it includes income from abroad. These are the two main concept of calculating national income. Now, from these two, when we are going to obtain national income, the value of national income, the estimate of national income, we have to go through some deductions. That is, from GNP, we have to deduct depreciation. Depreciation means it is a cost of fixed capital consumption. Fixed capital consumption. During the process of production, there may be so many accidental cases or maintenance cost or repairings or related to the capital which is used. So it is called the cost of fixed capital consumption. When we are using the fixed capitals, that fixed capitals require some expenditures of their maintenance or repairing or wear and that may be called wear and tear. It is a very little sum amount that will be estimated approximately, and that amount must be deducted to obtain net income, net national income, to obtain national income. But there is a restriction of calculating national income, that is, national income must be always calculated only at factor cost, not at market value. So we have to look after, we should take some precautions. We should keep in mind that our account of GNP must not be at market price. It should be at a factor price. If it is at a market price, then we have to convert it into factor price. How will it convert to factor price? We need to subtract indirect tax, because market price always include indirect tax, and add subsidies. Normally governments provides subsidies to producers or production related to goods and services. In that case, that should be accounted so that we can obtain the actual value of the national income or actual value of the goods and services produced. Then only it will become factor cost. NNP at it convert. If we like to convert it, then we have to subtract indirect tax and add subsidies. Then we will obtain national income. That means our accounts may be in two ways. One is at market price, another is at factor price. If we like to get market price from this NNPFC, then we may do this. What we will add with NNP at factor cost, we will add indirect tax and subtract subsidies to obtain the market price. These are the basic things of the estimation of national income. But in calculating national income, we always faces the problem of double counting when we go through the final product method. When we go through the final product method of calculating national income, to avoid a problem of calculating national income, that is called double counting. An account is counted in doubling way. Say for example, Mr. A, who is producing wheat, say worth of rupees 100. He has consumed worth of rupees 50, wheat worth of rupees 50. Then what surplus he has? Only surplus of rupees 50 worth of wheat. Now that surplus he may sold it into the market, and Mr. B, who is a producer of flour, he is purchasing that surplus of wheat worth rupees 50. So his raw materials cost rupees 50. With that cost of raw materials of wheat worth rupees 50, he may produce flour worth, suppose say 150 worth of wheat, value of flour. Then actually what he is producing, we will calculate later. Now say Mr. C, who is producing bread. To produce bread he requires wheat flour, so he is purchasing flour worth rupees 150 and produce say suppose 250 worth rupees 250 worth of bread, value of bread. Now if we calculate the account of national income in the method of or in final product method, actual final production of wheat is 100, final production of flour is 100, final production of bread is 100 or 250. Then total will be the value of 250, 340, 300, 400, 500. This will be the value of the total final product. In final product method we will obtain the value of rupees 500. Now it is right or wrong? It is totally wrong measure because it includes the value of 50. Here already in 100 when we are calculating, যখন আমরা হুইটের হিসাব নিচ্ছি তখন কি পেয়ে গেছি আমরা অলরেডি 100 হুইটস উইদাউট এনি ইউজ অফ র ম্যাটেরিয়ালস আমরা অলরেডি পেয়ে গেছি হুইট অর্থ অফ রুপি ভ্যালু 100। তাহলে কি হবে, অ্যাকচুয়ালি ফাইনাল প্রোডাকশন অফ হুইট ইজ 100, out of that 100 50 rupees or value of wheat worth rupees 50 is used by the flour producer to make it flour. It means the actual production of the flour by Mr. B is not rupees 100 because he in 150 this 50 is calculated, estimated. So it means with this 50 rupees 50 he has added the value of 100 rupees to convert the wheat into flour. So actually the value of flour or the value worth of flour produced are rupees 100, and in case of bread, what he has done, the bread producer has taken the flour from Mr. B in total of rupees 150. Say I have taken whatever the flour produced by Mr. B is used as raw materials by Mr. C, then actually Mr. C is producing how much value of bread, worth value, or how much worth of bread, that is rupees 100. It means Mr. C has added some value to convert the flour into bread worth rupees 100. It means the actual production after deducting the value of intermediate goods, what we will obtain, 100, that is 100 plus 100 plus 300. Equal to 300. This is the actual value which when we deduct the value of intermediate goods we will obtain the value that is 300. That is cost, that is worth 300 is equal to 300. Actual value of goods produced is 300, but we have calculated it previously when we are taking the help of final product method. We have calculated the value of worth rupees 500, which doubling the account of value of intermediate goods. That is the reason, that is 150 and 50 is counted there. That is the reason it becomes 200, 300, 500. So if we deduct the value of intermediate goods, we will actually obtain the value of final goods which is produced. So this is the way, by deducting the value of intermediate goods, the value of intermediate, deducting the value of intermediate goods from the final value of output produced. যা কিছু ফাইনালি উৎপাদন হয়েছে তা থেকে আমরা যখন ইন্টারমিডিয়েট গুডসের ভ্যালু বাদ দিয়ে দেয়, তাহলে হোয়াট ইজ দ্য ভ্যালু অ্যাকচুয়ালি অ্যাডেড to convert the goods into final produced or final output will be obtained, and then we may avoid the problem of double counting. That is the reason, in case of measuring national income or GDP, the method of final product method is revised as final product and value added, you may say value added method. This much for today's video. Thank you for watching my video.